Hello guys, welcome back to this week's quick dive. So what are we going to talk about today? AirAsia, right? Recently they raised a bunch of money. We'll share with you what we think about it. And then linked to AirAsia is Malaysia Airports, right? There's a scuffle between them and the Subang Airport authorities, as well as what we think, where we think the Malaysian economy is heading.
So the extended EMCO in Malaysia has definitely battered a lot of retail-based businesses. We as value investors like to find opportunity for these companies when the sector and economy recovers. We're having a special deep dive session on the 29th of July. And for those who register early, you get an early bird discount. The early bird discount ends on the 23rd of July. We'll be talking about companies like Padini, Mr. DIY, and even Focus Point, who has a very interesting subsidiary. So check out the registration in the comment section below, and I'll see you on the 29th.
Right, John, let's start with the OPR, right? We cannot talk about the economy without talking about the interest rates. For those of you who don't know, OPR is basically the interest rates for Malaysia. It's been dropping since 2018. So what are your thoughts on will it keep going down?
I just hope we don't go into negative territory. I think it will be a precedence in Malaysia. Yes, countries in Japan, in Europe has already experienced this. But I think the government is really trying hard with all the levers that they possibly have to spur spending. But because of the extended EMCO, even those who have the ability to spend will find it very hard to spend, and it's not getting the intended effect that the government is, trying to spur. I mean, I have friends who are real estate agents, even our SIB members who are real estate agents. They seem to find a tightening of the credit policy or the credit lending guides by the banks rather than a loosening, in which the OPR is trying or intending to do, right? So
actually, you're right.
What are your thoughts?
Right.
Yeah,
because like this, even though the interest rates can fall, but that doesn't mean that the bank lending standards will fall.
Correct, exactly. Yeah.
Right?
Yeah.
Unless somehow the Central Bank of Malaysia can tell Public Bank or Maybank to say no, reduce the the bank statement requirements from 6 months to 3 months or something like that. Right?
Exactly.
Until they do that, it's going to be hard to stimulate. That said, I think OPR and all that, this is what everyone's looking at, right? And
Correct.
I want to turn your attention to this other slide, which I think is more important. It is the leading indicator. Now, as the name suggests, it actually helps you predict with some degree of accuracy, by my estimate, anywhere between 70 to 80% accuracy, of what the economy is going to be like in about 6 months. So if you look in front of the slides here, right, basically it breaks down into 7 areas: Bursa Malaysia Industrial Index, imports of non-ferrous metals, real imports of semiconductors, etc., etc. I'm not going to read everything. Basically, it's leading because, let's say, like real imports of semiconductors, right? If you want to know if the semiconductor industry is going to do well, profits are going to go up, then if the imports of lower value semiconductors keep coming in, it means that a lot of the semiconductor companies are actually buying up all this, what we call inventory. So if they're buying up inventory, what does that mean, right? They're not just buying it for fun. They're actually thinking that growth is expected.
It's imminent. Yeah, because they wouldn't be taking the risk of stocking up inventory and it being a holding cost unless they already know they have the sales to make.
100%. So if you look at this, the one on top, the bigger number, right, for each of these circles is the one in April, and it's compared to the previous month, which is March, right? So March is the smaller number below. So outside of real money supply and Bursa Malaysia Industrial Index, for those who don't know, Bursa Malaysia Industrial Index is very wide. It includes things like petrochemicals, include things like your healthcare, rubber, and all that. Outside of those two, everything else is not doing really well. However, if you look at the next slide, actually we are in a pretty decent space, especially since 2020. So if you just read the news or you watch or you read things on WhatsApp, you might think that the economy is going to be really bad. And certainly there are parts of the economy that are not doing well. However, when you look at the leading indicator for Malaysia, if you ignore the noise and you actually look at the facts, and this is Department of Statistics Malaysia stuff, you would know that 2020 is actually one of the best years when it comes to economic activity. Only losing out to the 1993 to about 1994.
Yeah. The gradient looks almost the same, man, MJ.
Yeah, and it's not even over yet. It might be, right? So that's why there's two potential. Either we are at the peak right now and it's going to decline, or it might keep continuing. So again, I want to reiterate, what you see now, right, is what is most likely going to happen in 6 months. You will see profits, you will see a lot of economic activity and revenue happening 6 months from now, because this is a leading indicator. It helps you predict with certain degree of accuracy. So if you look at this, you would have known that the stock market was a good place to be. And true enough, if you invested in 2020 and you ignore the noise, this is exactly what you have seen. Now, the proof is that if you look at a coincident indicator, so in contrast to a leading indicator, a coincident indicator is something that's happening right now, not something that they're trying to predict. It's not an indicator to predict things, just an indicator to prove whether the predictions were true. And true enough, if you look at non-metallic minerals, transport equipment, wood and furniture, paper products and printing, they've grown by like massive amounts, like 68%, 60%, 57%. And even those, the lowest growing one is still F&B and tobacco, it's still at 14%. So it's pretty massive. However,
it shouldn't come as a surprise, especially for transport and all, because logistics guys are virtually creaming it, man.
So if you ignore the noise, again, I want to repeat, right? And what I'm sharing with you guys who are watching is that if you just look at this and it's all available data, it comes out once a month, you would know where to put your money, right? So the next slide is a fun slide, right? Obviously, the sales value of manufacturing actually bounced back out really quickly. That's also probably why COVID cases are not dropping and increasing, because a lot of factories are still open, a lot of power plants and all that are still open. These are areas, right? These are hot areas for COVID cases to happen. So it's just something.
The factory cluster.
The factory cluster.
So if you're invested into some of these manufacturing companies, you are indirectly the cause. We're just kidding. We're just kidding.
Sort of, yeah. Now, if you look at the next one, actually not everything is great. Actually, our our month-on-month, I believe, this exports is actually not doing really well, right? It's down like double digits. And the main culprit in the next slide is really, if you look at vegetable oils, mineral fuels, machinery and transport, these are the key pillars of our economy. The price of these goods actually went up, but the volume sold actually went down. And that's why net, the total value is actually dropping. So before we move on, John, do you have any other thoughts about all this?
I think kudos to the statistics department for producing a lot of this data. Many Malaysians actually don't refer to this, and every time they go into a market outlook talk or a seminar and they talk about macroeconomics, right? What's the common guilty party is always GDP.
Correct.
But how do you put in a second level thinking and together more insights and more detail is actually looking at this leading and coincidental data to help you become a better investor. And I think, MJ has very clearly shown you how you could use certain leading indicators to position yourself into businesses that will benefit, and already shown those signs, with these leading indicators.
Yeah, before I end, I just want to let you guys know as well, this is actually how a lot of what we call macro fund managers actually make bets in the market. So if you want to use economic data, broad-based economic data, to kind of like predict where the markets are going, this is a very good way. Okay, before we move on, guys, if you have this stock idea that you are really excited about, but then you're not sure whether or not you're on the right track, you can actually just send us an email. We'll actually give you a totally free review. And also, if you actually produce really good research reports, we'll actually consider adding you into our research team. Send us the report to hello@firl.co or hello@firl.co. You can get the full email in the description or the comments. All right, John. So next we'll talk about MAHB or Malaysia Airports Group Holdings Berhad. So obviously due to the COVID issue, nobody is traveling. So it was down a lot, basically. It's just basically down like 20%, and then now there's been a bounce back up. So recently, there was a bit of a disagreement, right, between them.
A power tussle, I would say, a tussle.
Power tussle. So maybe just guide us through some of your findings.
Just some context for MAHB. They operate 39 airports in Malaysia. Sadly, only 7 are actually making money, to be honest.
Wow.
Yeah, so it's cross-subsidizing. And I'll explain why this is important when we go deeper into the Subang Airport debacle. They do operate international airport in Turkey, fully 100% shareholding, and they have a minority interest in the Rajiv Gandhi International Airport in India, where they hold an 11% stake. Revenue came down. If you see the brown bars on the slide right now, revenues actually dropped by more than half between 2019 and 2020. 2019 was actually a pretty good year for them. And a big chunk of their profit actually comes from this thing called airport services. Okay, they had a profit in 2019, but this year it's a loss of 736 million. And the next slide I'm showing right now is actually the operating expenses. So as you saw just now, revenue was about 900 million. Okay. But then the operating expenses for 2020 is close to 1.2 billion. So it's really burning money. Thank God they have quite a bit of a cash pile. They can last them till, I think, 2020, as some analysts has written. But here comes the interesting debacle and why they are so hot in the news is there has been a proposal submitted by the WCT Group. For those of you who are not familiar with the WCT Group, the owner is Tan Sri Desmond Lim, who is also infamously linked to the previous administration, as well as the owner of Pavilion Malls. Huh. So right now they actually have a concession, MJ. They have a concession to run Subang Sky Park Terminal under a Sdn Berhad. And I think they saw the profitability of it. So they submitted a proposal. The backstory is this: they submitted a proposal to Cabinet to actually take it out off from MAHB hands, and they want to own the concession. MAHB has an operating agreement until 2069 to operate all the airports within Malaysia except for Johor. So in a way, the reason why they're willing to do that and have that operating agreement is like what I said earlier about these 39 airports and only 7 are making money. So these 7 are actually cross-subsidizing the airports that are loss-making, especially in rural areas in Sarawak, in Sabah, and even some airports in Kelantan and Terengganu where they don't get that kind of passenger volume. So that's why they were willing to bear that kind of cost. If not, they would just shut down those loss-making airports, right? There's no way that they're gonna run a loss-making airport and continue to bleed lah.
It's a national service, basically.
Yeah, it actually is similar to the thesis that you talked about time and TM. It's the same concept. It's the same last mile, and people still need the service, but then you need to find a way to subsidize it lah. And MAHB actually had a 1.3 billion regeneration plan for Subang Airport. They're gonna turn it into a sky park, and they want to increase the revenue from non-airport services. So things like MRO, which is maintenance, repair, and operations. They want to increase those kind of revenue streams, so it doesn't just depend on airport services, which is very dependent on passenger volume. Because some word on the street is this: if you look at airport of Subang and KLIA, they're not very far apart. MJ. I mean, in our distance, it's very far, but if you go to developed countries, actually, it's not that far. It's
it's actually not bad already.
Yeah, it's actually not bad, right? Yeah, so what they worry is that if they turn Subang into a scheduled flight services airport, no one will go to KLIA. You're cannibalizing off each other, right? And what MAHB has in mind was actually to turn it into more of a private aviation hub where people pay hangar fees, where people send their plans for repair and all that. And that would generate more non-airport services revenue to subsidize the other airports that are loss-making. So the other thing, this is the potential loss in revenue if MAHB were to lose Subang Airport. It will be to the tune of 11.9 billion, MJ. It's not small. Yeah, it's not small. I think you can build a whole KLIA, if I'm not mistaken. KLIA took about 11 billion to build. Wow. There's two Sabah Dynamics there, right? 11 billion. There was two Sabah Dynamics before the market, the crash of the price. Okay.
Good one.
Yeah. So the next one is why they are attracting a lot of news is because of the Aerotrain contract. And this company called Pestec, MJ?
Oh, yeah?
Yeah. So they were planning to award a retrofit upgrade project for the Aerotrain in between the main terminal to the satellite terminal in KLIA. And that contract has attracted 5 bidders. All of it are what we call joint ventures. So MMC is partnering with Japan's Mitsubishi. MRCB is tying up with later Poma of the US. Pestec is actually joint venturing with Canadian unit called Bombardier. So for those of you who are unfamiliar with Bombardier, the Putra LRT line is propelled. You know, the one that just had the kiss, the kiss incident. So, yeah. So
a very costly kiss.
Very costly kiss and cost someone's his job as well.
Yeah.
Yeah. So and the last company is actually Harta Suma plus another Australian company called Doppelmayr. For those of you who've been to Hong Kong, the cable cars in Hong Kong, those were built by Doppelmayr actually. So these are very world-renowned names: Bombardier, Doppelmayr, later Poma, and a local outfit called SMH Rail. So this is the dark horse of all. And the reason why is a big news is because it's 750 million. The most expensive bid is the cheapest bid came in around roughly about 400. The most expensive is rumored to be around 750 million. So can you imagine at revenues of 1 billion for roughly only 1 billion for MAHB this last year 2020, they're going to award a 750. So the multiplier effect's very big. That's why all eyes on MAHB right now.
Yeah, all eyes on Pestec as well, right?
Yeah, all eyes on Pestec as well.
Hopefully, the Malaysians can win it.
Yeah, exactly. Yeah. So any thoughts you want to add for MAHB before we end?
It's very linked to our next company that we're going to talk about, but it's just, I think a lot of the problems they're facing right now can be solved with just a reopening of the economy, right? And
I agree with you.
Once it opens up, then a lot of these problems will be, could be swept under the rug, or at least they are going to be more lenient, and they're going to be like, okay, there'll be more give and take probably. But then again, we never know for sure as well. So
yeah.
As usual, if you guys are enjoying the video, remember to give it a like, comment, tell us what you like about the video, what you don't like about the video. If you like it, of course, share it with your friends. We need more people to see content like that, because really we want to help people understand the stock market better. And as always, make sure you subscribe. Click on the notification bell so that you know when new videos are out just for you. Alright guys, last company, AirAsia. I'm sure you guys have been waiting for this. Basically, AirAsia has not been doing well, actually even before COVID. Right, share price has not been doing really, really well. Of course, during COVID, it got hit even further. AirAsia is a stock that, divides opinions. I always call it the durian of the Malaysian stock market. Either you love it or you hate it.
A quiet taste.
Yes, indeed, a quiet taste. So now, if I go on to the slides, right, basically, I just want to update you guys what's happening on AirAsia. Basically, they're doing a rights issue plus also issuing a warrant where they have this thing called an RCUIDS. It's just a convertible, redeemable, unsecured Islamic debt security. Yes, I think I got that right. So they're aiming to raise about 1 billion. They may or may not, but the key thing here is that if you're an AirAsia shareholder right now, you will be diluted. Right, so exactly what is the effect? So you go on to the next slide. This is straight from their filings. But basically, if you look at the top left, you'll be diluted by 34 to 37%. Okay, I know dilution math is a bit complicated, but let me just summarize it very simply. Assuming you own 10% of the company, after the dilution, assuming you don't take on any rights issue, you will own anywhere between 6.7 to 6.3. Now, why is there such a discrepancy? Why is it not a specific number? Why is it 6.7 to 6.3? The reason is because not all the rights might be taken up. About 600 million out of the 1 billion is will be taken up by Tan Sri Tony, by Kamarudin and all that, and then there's a few private placements as well. So that is like guaranteed. You will get 600 million of capital. So then the other 400 million, that depends on the shareholder or institutional shareholders that whether or not they want to take up the rights issue. So before that, John, do you have any preliminary thoughts on the rights issue?
MJ, if you own 10%, I think we'll be very happy already, right? Of Asia.
Well, it depends what price I buy, right?
Yeah, exactly.
Right.
Yeah, I think I'm glad you pointed out that they have to actually paint the ban because not all rights are being subscribed. And I think this is always an ongoing question for existing shareholders. Why should I trust management? Why should I give them money? Hey,
correct.
This is a scenario that is unprecedented in history. I think, as we all know, it's not that they don't want to make money or it's because of mismanagement, but because of situations beyond their control. I think this is in a way a lifeline, and I think kudos to what Tony is trying to keep Asia afloat in these trying times. Yeah, so as what you rightly pointed out, the math is complicated, but I think ballpark your 6 to 6.7 to 6.3 was is quite a good approximation, really. Yeah.
So now the big question on all this math only makes sense if the company can survive.
Yeah.
So if you look at the next slide, basically the group AirAsia has been cutting costs.
Yeah.
So I'm not going to read everything, but basically some of their costs includes like fixed costs, right? Their rental and all that. Then you got their staff costs, which has reduced by 62%. And then the key one is actually the leases. So a while back, AirAsia sold most of their planes, I believe in 2018, 2019, around there. And they do actually own very few planes. They actually lease the plane back. They actually basically rent the plane, basically.
Yeah, rent.
And the big advantage is that they can actually have this thing called forbearance, which just means that because of COVID, they just pay 76% in this case less. Right? So this is really helpful because a lot of people, when they were calculating AirAsia last year, I remember we did a video, not the one in our channel, on another one, which was already taken down. People were really pissed that we came up with certain calculations, and they thought that they thought that the leases, the rent for the planes will not decrease, when we were actually pointing out obviously it has to decrease, because if they don't, then AirAsia may not be their future business partners, right?
Correct.
So by the way, if you want to watch our introductory video to AirAsia, you can click here on my face, right? This is the thumbnail. Now, so this is the cost, right? They are already on a cost-cutting measure. So if you go on to the next slide, we did some estimation. So in 2020, because they didn't have all these advantages, they were losing about 900 million a quarter, right? Which translates to 3.6 billion outflow, roughly, right? I mean, depending on who you ask, there might be differences, but basically it's about 3.6 billion. In the first quarter of 2021, because they had all those cost-cutting measures, it actually dropped down to 460 million outflow, cash flow for the quarter.
Dropped by
it's about half,
man. Yeah.
Correct. So let's be conservative and let's say it's 2 billion outflow, right, in 2021. It should be less. If Tony is good, he will actually negotiate further. But let's say it's 2 billion. Let's be conservative and say that's the amount they have to pay. What does that look like, right? Can AirAsia survive? So roughly through the fundraising, so like for example the rights issue, depending, might be 600 to 1 billion. They've got another private placement. It was initially supposed to be 500 million. Now it's 300 million. And then after that, they've got loans also, right? I think most people agree that they're most probably going to get loans. It will be it'll be a disaster if they don't. So when you add all this together, basically they can raise right now roughly about 1.9 to 2.3 billion in that. So that's the amount of cash to burn. So if you look at the next slide, what does that look like? Before that, important that I just state some assumptions because I could be wrong.
Yeah.
Right? Number one is that the first assumption is that it remains or it goes down further. So the leasing and stuff, they don't increase, but it goes down some more. The second thing is that the private placement stays at about 300 million. And of course, that the loan arrives. If now these are true, then whatever projections that I make are going to be false. Okay? So if you go to the next slide, this is basically what it looks like. If they only raise 600 million from the rights, they've got 12 months to survive. So they don't have any revenue, 12 months, they can do it. Scenario 2, if they can raise about 1 billion, so that number goes up to 14 months. So about 1 month and 1 quarter, roughly. So this is it.
Yeah. And this is with assumption no flights, right? But with what we've gotten is that they are already starting to see trickles of flights, especially in Thailand and in Indonesia as well, right, MJ?
I need to confirm this. This might actually include the current regime. Yeah, basically, I don't want to get into technicalities of how I calculated it, but basically it includes currently what the amount of revenue that they are making lah.
I see.
So then people will be asking about valuations, right? Like, so is it if they can open and travel within the 12 to 14 months, and if they return to their 2018 net profit. So, we all, they've sold a bunch of, like, I believe, Asia, India, they've sold. Japan, I can't remember. I think Japan
they closed it down.
They closed it down.
They closed it down already this year.
So we cannot expect the net profit to be the same in 2018, but let's say it's only half. Right? So a post-dilution market cap of 5 billion, you will have a PE of around 6. And if it's based on a current market cap, for whatever reason, let's say the market cap stays the same, that number becomes 4 times. Now, is that cheap? Ultimately, you decide. And, John, do you have anything to say about what my valuation?
Yeah, I think your assumptions are aligned. I think we fail. Most of the time, people look at short-term consequences rather than long-term results. And what we are trying to do here, and the math that MJ did, was trying to show you, can they actually stay afloat? Because if they do, then the runway is very long. I mean, check out our older video, as MJ pointed out earlier, on AirAsia. There is so much in the game for them. There's a lot of tailwind pushing them forward in this aviation, a very young aviation sector in Asia. And I think that, if they survive this crisis, they will only grow stronger. This is not a buy call or sell call. It just shows the respect that MJ and I have for Tony and their management. And I think they're trying their best to actually keep afloat and stay afloat during these trying times.
Yeah, totally agree with that. And I think the key thing for you guys as shareholders or potential shareholders is that you need to think in a way that it could go south, or it could go north, right? And are you ready to take advantage of it if it bounces back up? And if something bad happens, is it okay that you make the losses? I think that's very important, right?
Yeah, your risk reward calculations actually.
Correct. So that's why I would say do your proper analysis. Feel free to disagree with our calculations. Put it in the comment section, and invest safely. Any last words?
No. See you guys in the next video, man.
All right, man. See you next week.